Hello, today is the 24th of September 2022. Let's start with our disclaimer, go over our calls and make some predictions. And because it's the weekend, we'll review the longer term picture as well. It's my trading plan for Monday, which is September 26, 2022. Please remember, it's a plan. I can change it. It can also be completely wrong, and any trade you make should be at your own risk. We look for the pattern with the early high, which we got. And Monday we'll also see a pattern with an early high. Well, here's what we said. We had first we said that look for a gap and prompt move outside the day's range. We got that. Looks like we're going to a target in the low 3700s. We got that. I wasn't confident that was going to hold, and it didn't. These are the patterns I'm looking for next week. This is the last of our lower targets, 37, 45, 79, that printed. The next lower target I have, which hasn't printed, is from back in 2020. It's around 3200. That's not really in the picture at this point. I still have around 10 higher targets from earlier this year. The system's over 20 years old, and I've never had that many targets stay unfilled in a year. So at some point we're going to retrace higher up. During the day, MEJT's only signal was that this drop was false and price would recover, which they did. Now this is actually a remarkable recovery. You gap down, hit lower low after lower low after lower low, only an hour left to trade. Normally when you're in a trend like this on a Friday, you expect it to continue. This is probably the least likely time for a reversal to occur because retail customers aren't going to be participating. Now, it could always be short covering, but I don't think shorts are going to be anxious to cover when they're making money hand over fist like this. The recovery over all these lows after gapping down is positive enough, but it's particularly positive on a Friday. And it's particularly positive when it happens late on a Friday, because you're not going to have a surplus of buyers. You're going to have an absence of sellers. And this is a sign, if it's maintained at Monday's open, it's a sign that selling has been exhausted on this drop. Of course, if we open down here, it doesn't mean a thing. You have to go past Friday's close by 1 cent, and Friday's close is kind of significant because, as you can see from these two superimposed lines, it's right at the price of a prior FOMC announcement price. So you stopped right at resistance, but if I'm right about this reversal being very significant, the odds are good we're going to gap over this resistance area. Well, this is Tom DeMark's combo buy signal. We can get rid of the X now. We don't have to fudge. We have 13 bars down. It doesn't identify the exact low, but it certainly can. It just gives the area of a low. It identifies markets which are overextended. Now, all the way up, we get signals like this, and the overextended condition would be worked out by consolidating over time. But it can also be worked out by recovering in price. And when you show bottoms rather than tops, that's been typically what happens. If you're ever going to catch the dagger, this is when you want to do it. If the knife is falling, it's a bar completely under the lower Bollinger Band That's a sign of an overextended move. Sentiment indicators are completely off the charts. They were last at these levels at the June low, and in fact some of these sentiment indicators have exceeded by a large margin the sentiment indicators that were seen at the June low. Here's our weekly chart. We're right at the support of the lower Bollinger Band. We still haven't broken significantly under this TDST line. Here's one full bar under the line. To break support, you have to get another bar under this one and then trade 1 cent lower than its close. That hasn't happened, so you're in the support level. Well, this was the old chart, but it wasn't the only count. And by going this low, we've invalidated that count. But fortunately, that's not the only count. Let's try this one. You've got an A, a B, and a C. And then wave gray C has a fib relationship with wave gray A. So the fibs work. And I don't usually use the term wall to describe a move like this on a daily chart. I usually reserve it for intraday charts. But if I did use a wall, that would be it. It's unrestrained selling, no pullbacks, and even though we've had all this selling, it's a big drop to, but not through the prior low. So it's a retest of the low without breaking it. Now, of course, if we gap under this low, we can crash. I mean, that can always happen. But so far, it's just a retest. Let's look at this pattern here. You can count 5 waves down, and the fibs all work. Let's look at this last wave down on a 5-minute chart. In the world of counting waves, the ratios don't get any better than this one. 4 is equal to 2. All these things are in balance. You reverse right on the dot. Now, just because you have a wave count that works, it doesn't mean it's the right count. But if you don't have a wave count, you're not through dropping. But this count works on multiple time frames. So now let's take a look at the long-term chart. We had a number of possible areas where it would make sense from a perspective of the waves and other indicators to call a low. We came within 14 handles of this price. If you take wave green C and compare it to green A, I think this goes back to 2000, I think over a 22-year time span, 14 points might be enough. The waves are in balance on multiple time frames with sentiment extremes which have been seen only at market lows. Monday's pattern has a early high. We could still gap down. Typically it's a rally day with a high in the final hour. Failure is a straight line drop. Friday we gapped down, hit a lower low, but closed over intraday lows. If maintained at Monday's open, it's a bullish pattern. It's especially bullish since it occurred late on a Friday, when it's most difficult to reverse a day-long trend. Sentiment indicators are at levels which approach and in some cases exceed levels last seen at the June low. We have a DeMark combo buy signal and the waves are in perfect balance at Friday's low. These are all signs of sellers being exhausted, and I expect a good rally from here. We still need confirmation by trading over Friday's close, I'd be suspicious of the call if we didn't gap up because we're at resistance. If the call is right, we shouldn't trade significantly under June's low, and I doubt we even challenge Friday's low. Just be aware if the call fails, it fails big time because my next levels are hundreds of points lower if this doesn't work. But I think it's going to work. You don't get sentiment levels like this too often. You don't get waves in alignment on many time frames like this too often, and you really don't get late Friday reversals like this too often. But you really want to gap up. If we don't gap up Monday, I'm suspicious, but I think we will, and I think we're going to have a good rally. Just keep your stops close because we're reasonably close to where it's invalidated. Monday's pattern has the early high. I think this low holds when we go much higher. Not necessarily all in a day, obviously. This could last quite some time, and that's today's call.